Remember, it's not just fighting inflation. It's not only get to 2%. There is a tri-mandate. And the other part of the mandate has to do with maximum and full employment. And we see labor softening. It's not as tight as it was. And that is a concern.
Get ready for a new episode of KP Talks Dollars and Cents. Learn financial literacy and get real-time updates on all things housing, finance, and real estate. So let's get started. Here's your host, Kevin Perenio.
Hey, it's KP coming to you live from Park City. Got a full moon out here in the back, snow on the ground. Just flew in from Louisville, the Mortgage Collaborative. They had their main event out there. It was pretty cool. Got there Friday night, got to do a bourbon tasting on Saturday, and then got to work on Sunday. We had some panels. There was, I'm not sure if you know, but the Mortgage Collaborative is a group of independent mortgage bankers, credit unions, and banks that have a good vibe. They all try and collaborate together and come up with ideas to have their, run their business in a better way. And there is what's called the Emerging Tech Fund. So they have the ability to invest in prop tech, fintech, and different kind of incubated companies that are coming through and looking to raise funds. And then, of course, get used by all the members out there. So I thought it was a pretty cool event. I got to be one of the judges on the panel. So there was 4 judges up there, Jonathan Freed, Craig Ungaro from Annie Mac, Jonathan from Trained, by the way, Craig Ungaro from Annie Mac, and Chrissy Sukamic from University Federal Credit Union, where I first got my bank account. My first bank account I opened when I was a freshman at UT. Sorry, I'm trying to get all these lights on up here for you. Great event. Homing one joins the ranks of some past winners like Rebel IQ, Halcyon, Capacity. And the Emerging Tech Fund actually had about 8 investments in the past, and it was interesting to sit down at the meeting today and just go through it with the limited partners. It's a very differentiating factor investing in technology. Companies that have been investing the last couple of years, especially when it was tough, are going to reap some benefits and some rewards. The market's turned, rates have come down, spring purchase season's here, people's pipelines are up. There's about 50% less loan officers. There's a lot less capacity in the industry, so it's going to feel busy just because there's less competition. And so those investments, those growth-minded investments, even when things were absolutely brutal last year and a half to 2 years, are going to start paying off. So definitely want to thank TMC and everybody at the fund. I also did a panel today with Meridian Link, just talking about Gen Z and millennial marketing. So then hopped on a plane, came out here, have a few industry folks coming out here this week to meet, and then take a couple days off Good Friday at the end of the week. Okay, let's talk about our veterans. Chapter 8, VA handbook, commission for realtors. It's not allowed to be paid by the veteran, and the VA thinks that doesn't hurt veterans. Now the rules have changed. The courts have set a new precedent. So veterans will absolutely be hurt if they aren't even allowed the option to pay. I understand protecting them, not make them pay. But now that the rules have changed according to the court and the NAR settlement, we need to make sure that we take a look at the rule book and help our veterans. And I just want to get that word out there. And I know that they are. So they got to look at that. Can't give yet another excuse for a veteran not to get an offer accepted. And that could be what happens. Okay, PCE is out Friday, Good Friday, markets are closed, but the personal consumption expenditure is the big Fed deflator, the Fed's preferred inflation gauge. And that is a big, big number that comes out on this Friday. So remember, it's not just fighting inflation. It's not only get to 2%. There is a tri-mandate. And the other part of the mandate has to do with maximum and full employment. And we see labor softening. It's not as tight as it was. And that is a concern. We've gone from 3.6 up to 3.9% unemployment rate. And that softening of labor means people are out of work in an election year. Not that that matters, but I'm just saying it will have, at least with the doves on the board, some impact on the margin for sure. So it isn't just about inflation, although there's a big number coming out on Friday. And the third part of the mandate is making sure that we have long-term sustainable interest rates, right? So we have to sell 30-year long bonds and fund this government, which actually is spending less. We have this mini bus bill that got passed over the weekend, after midnight, kicking things into, I believe, October or August or anyway. But a bill's going to have to get passed in the next 12 months, a permanent bill. So We'll see if there's a debt ceiling debate and all that stuff in 2025, a year from now. You can probably bet on that. But, our government did get that passed, didn't get downgraded as a result of it by any of the ratings agencies for all this craziness. That's already happened a little bit here and there. And the budget and the spending and the rebalancing have actually come down a little bit from the Treasury. I'm not saying that our defense spending or healthcare spending has come down, but we have seen less of a refunding for our balance sheet. And the Fed has said they're going to let their balance sheet, start to slow their runoff, which is an interesting, comment as it relates to, how much we're spending here. But again, we've got economic growth. But do we? So we just set a record. I read the Elliot Eisenberg Bowtie Economist note tonight. We set a record for the longest time. The 10-year and 2-year yield was inverted, which is usually a precursor to a recession. The recession we talked about the last 2 years that never actually came? Well, maybe we're in one in Q2, in 2022 and Q2 and Q3. Or maybe we're in a rolling recession like housing has been. Dallas Fed manufacturing number 2 years of contraction. So you've got rolling manufacturing recession. You had rolling housing recession. So does that count? The 2-year and 10-year inverted yield curve is still going. So does it mean there's still more potential recession to come? Growth is slowing, and we have a GDP read that comes out on Wednesday, and that will be interesting to see growth in our economy. So if there's growth in the economy or slowing growth in the economy, you might see the stock market move a little bit, right? Growth scare, 10-2 inversion. That less GDP and less economic growth also impacts long-term sustainability of our interest rates and our ability to sell our treasuries around the world. So those are things we definitely have to look at. Okay, IPO market, though, they seem to be opening up. You had a big Reddit IPO with like $750 million. There's something like $5.4 billion in IPOs that went out just in the last, several weeks. So the IPO market, initial public offering, that's when stock companies go public and raise money and funds, to develop and grow. You're starting to see that thaw out. So we're back to risk on, all-time market highs, NASDAQ, Dow Jones, S&P 500, just within the last 2 weeks, all of them. Are we back? We'll see. We're all data dependent. Fed Waller speaks tomorrow. That will be market moving for sure. And then, of course, AI and all these, companies that are getting IPO funds and growing. AI has become, even more talked about. We talked about a lot at the TMC fund this last couple of days and during the conference. I started using Copilot through Microsoft Azure and the Microsoft 365 platform. It was pretty good. Someone sent me a Word document, and you just press a button that says summarize the Word document, and it cut through all the fluffy salesman bullshit that the guy wrote, and it just pretty much summed up, his entire document in like 4 bullet points. And then I actually read it, and I'm like, yeah, this actually was pretty good. So worker productivity, it's starting to take place. I've always said that Microsoft is probably on the cutting edge of that as it relates to using AI for actual productivity right now in the workplace. Their talk to text is amazing on Outlook. It's listening. Their Teams is good. We've got rid of a lot of our Zoom licenses going to Teams. So we're loving the AI piece. Obviously, it's a big component with our economy going forward. And again, a lot of discussion about it over at TMC over the last couple of days. And of course, the next big best tech show that's left in the industry that Paul Gelati and I are co-chairing under the leadership of Susan Milazzo, Sarah Keel, Nick Foster. Everyone's putting together the Mortgage Innovator Conference. It is in Anaheim. The California Mortgage Banker Association puts that on. And that's the last tech show before you go all the way to the fall. So if you want to come out, we've got some great premier sponsors, MIC 24, May 8th in Anaheim. Take your friends and family to Disney. It's going to be pretty cool. A lot going on there. And of course, it's disruptive. There'll be some great speakers, some great tech showcases and whatnot. So anyway, a lot going on this week. Hope you guys have a great week and finish up the month strong. Will March bail us out in profitability? Monster March, it's always one of the longest calendar days of the quarter of the year. There's a lot more time to fund. Did it make some more people profitable and bail out their Q1? Things are definitely looking good. Lots going on. We'll get some more information regarding NAR settlement, VA changes on commission concessions, PCE, and I'll try and get a Friday, if I can, I'll try and get a Friday update out. Have a great week. Cheers.
You've been listening to KP Talks Dollars and Cents, a top-rated show for those who want to learn about the economy and mortgage environment. Tune in each week for more episodes, and please leave us a 5-star review on Apple Podcasts and Spotify. Kevin Perenio does not render or offer to render personalized investment or tax advice through KP Talks Dollars and Cents. The information provided is for informational purposes only and does not constitute financial, tax, investment, or legal advice. For more info, follow KP Talks Dollars and Cents on all of our social channels.